Hey everyone, today's drop features Vlad, the founder of Tau Labs, a vault curator designing and managing next generation DeFi strategies, from mechanism design to incentive optimization, token design, and risk management. Welcome, Vlad. It's awesome to have you guys on.
Thank you for having me on, Ed.
No worries. Well, um, one thing I did want to ask before we get going, your website, 628labs.xyz,
Yes.
you go by the name Tau Labs. Would you
Yes.
like to tell everyone why?
It's the number. So there's a widespread use of 2 times pi being 3.14 and encryption. And some researchers, I think in the 90s, they proposed a new standard to use instead of 2 times pi all the time to use the new denominator, which is tau. And tau is 3.14 times 2 is 6.285, whatever other numbers are there. So that's why we use it interchangeably, 628 labs, tau labs, because it's the number. That's where it comes from.
Oh, great. I like that. Awesome. Well, look, it's really exciting to have you. It's also a super exciting week ahead for Tau Labs. You've got two pretty big strategies coming out next week. We'll get
Yes.
onto those in a bit. But first, Tau Labs has made a name for itself as a risk management, mechanism design, and tokenomics labs. For those who might not know, can you give us a quick overview of what Tau Labs does and the vision behind it?
Sure. So initially, Talab started off a year and a half ago as a tokenomics agency. So we were working with a variety of projects, helping them design their incentives, their emission schedule for tokens, their rewards, etc. Most of the time, half to 2/3 of our clients always tended to be DeFi projects because I come mostly for a DeFi background, and our team at the time also had more of a penchant towards DeFi. Um, the rest of the projects were really anything. So the data pipelines wanting to tokenize layer ones, games, everything. And about the end of last year, we were considering also getting into vault curation because it was getting big. And one of our clients back then that we still work with was also looking to do vaults. And they didn't have any curators on board. Back then, there were only like the big four, and the rest didn't really know how to enter the space. So the logic was, we are designing economies, we might as well also manage them. The know-how was in-house. And starting with the beginning of this year, we started seeing how we can actually run a strategy and do the whole execution in-house. And we launched our first strategy in April. It was not too far before my birthday, if I remember correctly. That was a nice gift for my 34th. And we launched. We didn't have any big funds backing us back then, or we didn't have the hedge fund network that we have today. I talk like if it was 5 years ago or 10 years ago, but in crypto, stuff moves like so fast. And we grew just through retail and being close to various communities, various DeFi communities. Shout out to the DeFi Dojo, my good friend Steven here. And we grew from zero to today. I think we're at 52-ish million TVL, and that would be around $7.5 million deposited in our strategies. And that's where we are at today. A lot more vaults and risk management, and all of the mechanism design and incentives that we design, we just put it into risk management because we work basically today almost exclusively with DeFi protocols and DeFi related stuff.
Wow, thanks, Vlad. That's a really good overview. So on the curation side, the strategy side, how do you actually decide which strategies to build and deploy? Maybe you want to talk about the big ones.
Sure. So when we were thinking of what to do, we were like, okay, so there are these 4 big curators in the space: Gauntlet, RE7, Mev, and Steakhouse. They're very smart teams. They're very capable. They've been doing this longer than us. Some of them, especially RE7, are actual hedge fund managers from TradFi, very, very, very wide experience. And most of the vaults back then were done on Morpho. Morpho still is a massive part of the ecosystem today. And the thought was, we don't have the resources Uh, we don't have their names, so we might as well, take an asymmetric bet and try and do something differently, and try and do a different strategy, different type of strategy on a different type of protocol. We didn't want to go on Morpho and after 4 or 5 pages of just Mev and Steakhouse strategies, maybe you see Tal Labs at one point. So we worked with more markets and we worked with IPOR. Initially, they were super and still are to this day extremely supportive. We also made the decision to do all of the automation in-house. And we started off doing a leverage loop for reservoirs SRUSD. People were doing loops back then, but not as much as they're doing it today. Um, it was a massive success. The strategy started growing like very, very fast. And we started making a name for ourselves as, doing these a bit more exotic strategies and with bigger bets on new up and coming, over collateralized yield bearing stable coins. And then we also started up we'll call it at this point almost a partnership with Infinify, who also absolutely ballooned over the past couple of months. We also started running strategies for them, and the bet was to always do strategies that might be a bit too out there and a bit more aggressive on the risk side compared to what the bigger guys were doing. And also, especially stuff that other people aren't looking at, like the bond ETF that recently yesterday just passed 1 million in raw deposits. And that's kind of how we made a name for ourselves, with a vast majority of it organic. And then we had the bigger funds try and start and pay attention to us, and we started getting in some LPs. So we did the opposite of what the bigger guys did. And yeah, it's worked great, and it's still working very good to this day.
Yeah, congrats on the progress. That's very quick, very solid. Obviously, with this growth, and with these varied strategies, you say, and you also mentioned you're going to take a bigger bet on a couple of other things. Well, obviously, this comes with risk management, and you've got a risk management edge. Your team puts heavy emphasis on risk management and capital efficiency. How do you balance yield generation with capital preservation, especially in volatile markets?
So that is yeah, that is a bit our secret sauce. We do we I mean, it's a bit less today than it was previously, but we don't have to be as aggressive with creative strategies as we used to be. And when I say risky strategies, I mean we are a delta neutral fund. We do arbitrage, we do carry trades, we do stuff like this. So there's no directionality in the strategy that we do. We always try and keep the principal neutral and farm funding rates. So the risk, you look at it in that point, it's nothing to do with taking asymmetric 10x longs on perps to farm some points somewhere. We are very robust when it comes to risk because everybody in my team is either a data scientist or a quant. So we do have like higher standards for how we approach risk. We always try and look at assets that are rising a lot more rapidly, and let assets that maybe not that many people are looking at one point. In Infinify, when we started talking to them, they were just getting started in June, and we liked the design of the overall stablecoin and the yield source. It was great. We thought that they should have a lot more interest and eyes on them. In hindsight, we were right. It's the same with the Reservoir. Reservoir grew very, very aggressively. And that's where we manage our risk. The idea is that if you take a bet on assets that are newer and you do a risk management profile for them as you would for a much more mature asset, the downside is not that big, but the potential for when it rises, it really, really makes your strategy sprint for a while. And to be very blunt, if you manage to make people more money than others within a fixed period of time and nothing goes wrong, they tend to really trust you, and it just only compounds from there. It was just a combination of more exotic strategies compared to what other stuff was out there. Like the Pendle Bond ETF is the definition of uh, like I cannot think of a safer uh products in DeFi. I mean, there are a couple of others you can do lending optimization, but for that, what we do in the bond ETF, we just look at Pendle. We select some PTs. We have our own risk methodology to see that they have enough depth of liquidity, that the APY is relatively stable, that the underlying asset has, it's over collateralized, its yield comes from a place that makes sense. And then we just group them together. And this gives a strategy that has consistent APY. Sure, when the market is very bullish and everything goes up, you don't make as much money as others would. But when the market goes very sour, like how we did on October 10, you have a locked-in rate. And we had on October 10, the strategy had a locked-in rate of, I think, 16%. Imagine that downtrend continuing, and you just make 16% on your stable coins, where when others are being, depegged. And that is exactly how we approach like risk management and our flavor of doing DeFi generally.
Yeah, 11th of October or 10th of October was a pretty big day, and I mentioned this on a podcast with Gauntlet and Upshift recently in the last week. The DeFi really stood out, right, as a big player in this, and set a great example. So kudos to you guys, well done. I guess your 50 million organic volume milestone is literally comes down to this trust that you've built and the strategies that you guys are putting out. Would you say this is what drove this strong traction?
So, and I'm happy to have anybody challenge me on this. Um, Crypto and more specifically DeFi is the most meritocratic industry that you can be in anywhere. Nobody really asks you where you're from, but if the stuff you build and the stuff you build works and is verifiable on chain, that's all anybody needs to know. Uh, the composability and the modularity that you have to build strategies to combine assets to do money Legos, as we call it, is you cannot do this in TradFi. Simple as you need a lot of base capital to get started. You need 100 million licenses to do things that make no sense to have a license. The barrier to entry is very high. Not to mention the actual experience. Most of the time, you have to be in the right schools and have to have have the luck to join a hedge fund when you're young to learn the ropes, have exposure to assets. So what we can do here is what we can do in DeFi is like unparalleled. And on the trust side, everything is on chain. The infrastructure is verifiable. There are no black box order books, and even if they are, people do tend to be very skeptical towards them. And the fact that you had decentralized protocols, some of them written by 24-year-old kids, and that performed well and they weren't hit. And then you have centralized exchanges with volumes in the tens of billions that had to pause withdrawals and deposits for their users because of, because of clogged mentals. Really shows the difference in this space. And for us, yeah, we are decentralized maxis. I firmly believe, and this is our thesis, that the financial system is being opened up. There will be a lot more curators, asset managers, whatever, doing strategies. On average, the average person on the street, what do you make in a bank account savings in your savings account at the bank? 0 point something percent. On average, banks make like 7 to 8% profit on every individual retail person's bank account. If you can get even 1% above T-bill rate in the space, simply because there's more competition and more modularity and you can mix and match more assets, people will organically come here, whether it's institutional or retail. Fundamentally, DeFi is powerful and strong, and the vast majority of financial system will move to be combined with it. I am sure in the next years we're going to see I don't know, even divisions of JP Morgan becoming vault curators. Like we already have BlackRock's Biddle fund. How long is it gonna take them to just not just have a tokenized fund, but also manage the assets inside? The
Yeah,
direction for us is clear with decentralized finance overall.
yeah. I mean, we've seen DeFi, right, setting the cat amongst the pigeons, so to speak. And everything's moving in that direction. You've just mentioned the very unfavorable returns you get from the banks these days, and actually a very good point you just made, which is they're actually profiting off us big time while we walk our way with nothing. So um, that's opening up doors, right? So when we're seeing that play out now, we're seeing huge moves, and it's been very interesting last few months actually. Well, I think the future is going to be huge. It's only just started, but back to you guys. You've consistently ranked on top platforms like IPO, like you mentioned with your product, with your Pendle Bond ETF strategy. It's super resilient. You got through that October crash. Um, Fixed rates, obviously, the backbone of a lot of what you do. You've said it's the best sleeping pill. Why do why do fixed income strategies matter so much for users and protocols right now? Then,
Because it's a hedge against volatility.
yeah,
If you have the market over a certain period of time growing from here to here, if you want to have exposure to the entire growth of the market, you can, of course, go participate in the space, go come in the trenches, but you have to take on the risk for that. And what the bond ETF does is it puts your target here. So you miss out on the delta between, the top of the bull market and the performance in the bond ETF. But this difference that you pay is the insurance premium that you get for whenever markets go south. We made this for treasuries. We made this for DAOs initially. That was the initial idea, is like, if you have stable coins and you don't do anything with them, lending optimization. I mean, we run lending optimizers for a couple of funds and are performing well. But on average, the lending rates are what? Even if you optimize as well as you can, it's like you can maybe have months where you have like 10% APY with a bit more aggressive risk on it. But fixed rates is different because you have everybody wanting to speculate on points, and you have projects trickling in good chunks of their TVL into the underlying PT, which is a contract with the user for those rates being not 100%, but mostly locked for a period of time. So you quote unquote lose out on some potential profit months on end, but whenever the market goes down, you are kept safe. Your principal is kept safe.
nice.
And I said it's a sleeping pill because it's literally set and forget. We've made it that way. I made it thinking about my dad because him and I occasionally talk crypto. I successfully orange pilled him in these past years. My dad was very much anti-Bitcoin, anti-crypto years ago, but now, and especially since inflation got very bad, he really started to see, oh, okay, maybe we should have an alternative system, maybe. Yeah, I thought about making something that would be very easy to understand and just thinking of people like him, just put some money in there and just not think about it. He never did, but he was the inspiration initially. So yeah.
So I've just been through the same thing with my dad, and actually in 2022 when the bear market hit, he he's always mocked me for being in this space, right? He's a traditional guy, of course. He's 70 something, and he said and then in January, I think it was January, February 2022, he saw markets going down, and he sniffed an opportunity. He gave me a call. He's like, "Listen, that crypto stuff you're doing. Can I can I get in?" And I was like,
It's a
"Hmm,
top signal
yeah,
when you
well, the
have
top had
your
been.
parents
Yeah, it
wanting
was
to buy.
perfect timing, right?" So I said, "Look, you can, but just wait some time." So I got him in, and he exited actually recently by his choice. He made some great gains. Okay, so I held his cash for like 12 months, for a year or so, and then got him in. So we got some good bottoms, and anyway, he just got out, and he was like, "Wow, that's cool. What do I do now?" And I'm like, "Well, you can put that money to work, and you can earn some pretty good yield on it." And he just wasn't buying it. I try to explain him, 6-7% is pretty normal. You can probably get her up 10, a bit more than 10. Dad, pretty safe. He just was like, "Nope, that is just not true."
The reality is that people are used to TradFi yields and high
Yeah,
commissions, and here that doesn't exist.
yeah,
Like the average hedge fund charges the famous 2 and 20, 2% management fee, 20% performance fee. The average in the space in DeFi, and like we have the same, our management fees are 0.5 to 1%, depending on the type of strategy and how often we got to rebalance. That's only for paying gas, basically. And our performance fee, we never set it above 10% because it doesn't matter. We just want to focus on volume and
Yeah,
performance.
yeah. And yeah, I actually just want to move on to mechanism design and tokenomics. Okay, just get away from vaults a bit. Beyond vault strategies, you also work with protocols on tokenomics and mechanism design, of course. I mentioned that at the beginning. How does that side of your business complement the vault curation work?
It's tokenomics walked so vaults can ran.
Yeah.
Tokenomics and overall mechanism design is where we started. Um, Writing white papers, designing modeling out entire economic flows of different projects. It was and still is a consulting side of the business. We used to take on like even much smaller protocols that were just getting started to help them design their economy. Today, we don't really have the time or the bandwidth to do that anymore. So whenever we do it, whenever we do tokenomics work, we do it for like much larger projects. But we've integrated the entire know-how that we had into the risk management side of Tau. We don't we still at heart approach protocols and use stable coins in the same way we did with standard projects. Like, does the economy make sense? Does this yield source make sense? How long can it sustain? Is it consistent? Is it consistent if this scenario happens or if that one? So it's still very much a part of our DNA, and it's what kind of sets us aside from the more um, TradFi sourced vault curators. We definitely have a different approach to like risk when it comes to incentives and how protocols are overall built. But that just morphed into vaults. So we became from a routine consulting agency, an on-chain hedge fund, basically. And yeah, the DNA of the tokenomics and mechanism design still exists a lot. We still do it, but as I said earlier, much rarer than we used to before.
What a great pivot, though,
It
right?
was organic, and I always say this: the design economies, we might as well manage them. So from
Yeah.
designing them to managing them.
Tau Labs has published some sharp research on point systems and incentive design, right? So how do you see the next evolution of these systems? How will they shape user behavior in DeFi?
That was an awesome piece of research done together with the guys at Absent Labs, and it was written by our much smarter than me head of tokenomics, 0x Kepler. But on the research and points, yeah, I mean, they changed a lot over the past couple of years. And they changed a lot in the last 6 months, actually. Uh, they've gotten a lot more programmatic and dynamic. And as the space is growing and as there's a land grab happening for the space and a lot of capital coming off chain, coming from the off chain world on chain. Uh, we're seeing a lot of RWA projects being tokenized. Oh, actually, that's where we work. That's where most of our mechanism design work is today. It's RWAs, tokenized real estate, tokenized gold sources, tokenized private credits, tokenized oil revenues, even. That's where a lot of it goes. It makes sense. It makes sense to incentivize people to come to your product, to use it for a while until incentives run out, and then you have part of them that stay. You only need to reach, and this is true for any fund. This is true for any protocol. This is true for any business. You only need to reach a certain point of critical mass where it's not that the business is sustainable, but you have enough volume organically inside that the business itself can grow through other means than just incentives.
Vlad, thanks so much for answering all these questions and being so informative about Tau Labs. We're coming to the end, and we're saving the best till last. You'd like to talk about your two big strategies that are coming out next week. Go for it.
Next week, as of the recording of this podcast on Friday, and when people hear it, it'll be this week normally. 95% chance we actually launch them next week, which is this week. Because we are very, very serious on making sure that all tests run well, even though we're testing both of them right now. So, the inspiration for this strategy has been seeing how successful reservoirs, ETH, and BTC strats have been on iPort. Uh, they are effectively a carry trade. And for people that don't know, a carry trade is when you collateralize an asset on one leg and then you take the collateral and you go do a strategy on the other leg. In TradFi, I think one of the most popular carry trades is the yen dollar, when people borrow dollar against the yen because that used to be extremely cheap, and then you take the dollar back to doing private equity or doing profits, and then you pay back that, which is much cheaper than just borrowing from the U.S. Than from the U.S. Fed directly. We're doing just that with Bitcoin and ETH. If you want yield on Bitcoin, there are very, very few sources to go there. There are very few sources to find. On ETH, it's a bit better, but not by a lot. Both of the strategies are yield an organic of about between a 9 to as high as 13.5. We use Infinify's SIUSD now that the yield on SIUSD is a lot more stable because their J-curve architecture of dripping yields has gone away. We can rely on this much more consistent yield source for it. So with both strategies, effectively, as far as the user is concerned, they deposit Bitcoin or wrapped staked ETH. And on wrapped staked ETH, you also earn the 2.6% staking yield completely outside of our strategy. So no performance fee on that from us. And then what the vault does and what we do is we borrow USDC against it. We take that USDC to Infinify into Morpho and we loop it a couple of times. We manage the debt on the first leg. And we've done a lot of modeling over the past 2 weeks to manage the debt there and make sure that we always have not one, but two liquidity buffers available. And to always make sure that there is enough capital to pay more debt than we would need even in a bad scenario like October 10. And on the second leg, the loop just works and it generates yield, which is an arbitrage between the core yield of SIUSD and the borrow rate, which now that the market is much more mature on Infinify assets, the borrow rate is like much heavier down. That we couldn't find, and I stand by this, but I'm happy to be proven wrong. It's actually a question for anybody listening. Once these are live and we've seen them work for like a week, I would love to see if people can find different sources of better base yield on Bitcoin or ETH anywhere in the market. And I say base and organic yield because this is the core yield you get on the asset without Infinify points and without iPort points, which are now a thing as of last week. I think at worst, these strats are going to be the top 3 performing strategies denominated in ETH and Bitcoin for the next 6 months at the very least. That is my most pessimistic outlook. We have modeled it again and again, and we are all obsessed with numbers and making sure that everything is good. Our devs also hate when I sell our strategies too much because he's like, hey, what if we disappoint people? But on this one, we are pretty sure that with all the models, with all the risk parameters we have, they're gonna perform extremely well. So can't wait to have them live and see how they perform live.
Congrats, Vlad. That's really exciting. So we've got a game for the audience here. So hopefully we can follow up with this. We'll see what everyone has to say. Yeah, big congrats on that. I'm really looking forward to getting these out. Obviously, from Portals, we'll be supporting. Keep us in the loop. All right. And well done to you guys in the team, and good luck with that going forward. So we're going to wrap up now, Vlad. Our final question. Every guest gets this. It's a little game. Today, the TVL of DeFi, as per DeFi Llama, is actually 152 billion, as up from yesterday, of course. And what's your prediction for this number at midnight on the 31st of December, 2025? So New Year's Eve.
I have to give a specific number, or can I give a range? Can I cheat and give a range?
It's got to be a number. It's got to sit on a board.
Let's make it a very nice, very round 201 billion.
Wow, 201 billion. I think you're the second person who's put a 201 billion. Out of all the billions that could have been chosen, I think we
That
actually have
202.
202. All
I'm the
right.
first to do the number, and it's also a palindrome. 202. You read the same from left to right. You do from right to left.
Brilliant. Yeah, exactly. All right. Well, Vlad, it's been great having you on. Thanks for approaching us to come on. We've loved it. We're also obviously in touch. We're going to be supporting all your positions through Portals.fi. And yeah, keep us in the loop with everything.
Thanks for having me on, guys, and awesome dashboards. I've actually started using them primarily to track our performance. We watch performance of our strategy from our own scraper, from iPort, and now I also have portals next to it to make sure that they move as we think they do.
Awesome. It's getting good traction everywhere. And thanks for that support. Obviously, there's a lot more to come. We'll be dropping in the next couple of months. So we'll definitely keep you posted with that as well.
Looking forward to that. Thank you for having me on, Ed.
Nice one, Vlad. Cheers.
Cheers.
Thanks. Bye.